Hi, welcome to this video day, which is on the 19th of June. We're on Sunday. In today's video, we're going to be looking at the USD against the major commodity currencies. So the pairs we're going to be checking out are going to be AUD, USD, USD CAD, and finally NZD, USD. We'll go over to the charts in just a moment. Now, in terms of our view of the USD, we're very bullish longer term, and we think the big fundamentals are extremely bearish for the commodity currencies. They could fall a long way to the downside. All three pairs, in our view, look attractive risk-reward trade setups. Now, what we are going to do is we're going to go and take a look at them right now. But just before we do so, please do keep in mind, it is my view as of right now. It can, of course, change in line with the market action and conditions. If you want to learn all our trading techniques and check out our daily technical sentiment analysis of 14 FX pairs, all you need to do is go to the link beneath this video and you get live access to our member center. You can also follow us on Facebook if you wish and join our Facebook group of traders. Right, let's take a look at the trade setups. Just on a chart of AUD USD, you can see a big fall there, rally, down, another rally and a nice red on Friday. I personally think now the AUD has got limited upside and probably 400 pips or more on the downside. I'll go through how you might play this pair on a rally or a break lower in a moment. What I want to do is look at the big fundamentals that I think will drive commodity currencies lower. So I just want to show you some other charts. Now, commodity currencies are extremely sensitive to global growth, contraction or expansion. Now, we do have a contraction in the global economy taking place. That will lead to weaker demand for commodities, which will weigh on the commodity currencies. If you think about it, commodity prices have been pretty firm, but the USD has done well on the commodity currencies. Once those commodity prices start falling, it will do even better. This is a good chart here from Bank of America. They say global recession is coming. China black, Germany blue, Japan pink are the world's biggest exporters. New export orders in their manufacturing PMIs are tumbling, signaling weak global demand, which will be reflected in lower commodity prices longer term. Even US exports are going down. Now, we have a global contraction going on. Could that become a recession? Well, here's the views of a survey of fund managers. Global growth optimism is at new record lows. Now, if we look at the world's biggest consumer of commodities, it's China. These are PMIs, they're leading indicators in terms of GDP, and they're rolling over to the downside. China's big problems, its economy was slowing even before it did those COVID lockdowns, which gave the economy another knock. Okay, so this is really bearish for the commodity currencies. Just want to bring up the CNH. This is the offshore spot Chinese yuan. You can see the USD is going up on the yuan. Why is that significant? Well, basically it shows that China is letting the USD rise. Don't forget they have a big influence on this pair. They're letting the USD rise, so it makes their exports more competitive. Now, tomorrow there's a People's Bank of China meeting, so we'll see if we can gravitate to the upside. If we do, that will pressure particularly the AUD and the NZD. This is the monthly chart. I just skipped the daily chart. Kind of came down, kind of sort of traveling sideways. You get a nice blue to the upside. Then I think that will weigh on the commodity currencies. Also, stock markets, if they continue to fall, that weighs on the commodity currencies as well. Just put up the SPX or the S&P 500. You can see it's weak. We had a blue candle on Friday. If you look at the monthly chart, it's looking very bearish. Done previous videos on where we think stocks are going. We think 3.2, maybe even 2.8. So risk off, bearish for the commodity currencies. Right, the USD chart again. Now, in terms of this one, we expect a break lower. You may get a bit of a rally in the short term. We think we're going to 65, which is well over 400 pips from current levels. We may even go to 60. I'll go to the monthly chart in a moment and explain how I got those targets. But in terms of if you wanted to come into this one, you could do it in two ways. We've already come in at 69.80, just a little bit below our entry at this moment in time. You could go on a break lower or a rally. If you rally up towards the 70 level, you can look to sell weakness, maybe use the same stop as us, 71.40, which is second level resistance. Okay. Now, in terms of we don't rally and we break through the low, you could go short with a stop at 76. Yeah, I'd go something like 68.80. Okay. Looking, like I said, for 65. Now, in terms of looking at the monthly chart, I personally feel we could get down to here. Okay. So 65. This is when COVID hit. Then you get the kind of stimulus from central banks, which sent the Aussie dollar higher. But if you think about it, the global economy now is in worse shape than when COVID hit. So 65, maybe even 60, if that makes sense. So yeah, looking for a really good downside in the AUD. Let me just now go to the next commodity currency, which is going to be USD CAD. Right, USD CAD. Now, in terms of this one, we've got it at 125.80, and it's really moved nicely to the upside to above the 130 level. Now, despite the big rally up, I think there's more strength to come. We've got 135 as a level, so basically 500 pips more, hopefully, to go on the upside. How would you play it if you wanted to come in fresh? Well, if you had some strength, you took out these two bodies here. I haven't drawn in the level, but you can see where my cursor is. Go long, stop behind first level support. If we don't rally and we dip back to this level, look to come off it on strength. The big level for us is 129. You can see our stop limit is 128.80. So you can buy it on a rally or a dip lower. And in terms of where we are, just above that 130 level, and it is a significant level in our view. And if we can hold it and move on, then 135 would be, I think, about fair value for the pair. We could run on even higher. Okay, now a big influence on the CAD is crude oil. It's the biggest export, and crude oil has just held up really. Sorry, I'm on the monthly chart, on the daily chart. It's been relatively firm, you know. However, we've got a nice big red on Friday. If this continues to the downside, yeah, we could get back towards the psychological 100 level, maybe even down towards 95. Even 95, crude would be overpriced in our view. So I think that would come into weigh on the Canadian dollar as well. Now, in terms of interest rates, which I didn't mention earlier on, market has a fairly hawkish view in terms of central banks of Canada, New Zealand, and Australia. Okay, but obviously the Fed have turned very hawkish recently as well. So the interest rate differential will not help the commodity currencies. It's basically been closed. Very hawkish Fed. You could see rates go as high as 4%, maybe even higher going forward. So yeah, like the look of USD CAD. Now we'll go to our last pair, which is going to be NZD USD. NZD USD, similar formation to AUD USD. Big fall, decent rally, fall, then a bit of a rally back. We're now flat and just basically want to sell through the 63 level, support at 62.80, stop at 64.60 behind this level here. Looking for monthly support at 60. That's nearby support, yeah, when the central bank stimulus came in after COVID, but maybe even run on to 55. Okay, now if we did rally up towards 64 level, I'd come off that level on weakness, probably the wider stop behind 65. If we got above 64, I'd sell back through level 63.80. Again, stop behind 65. We haven't rallied up, so we'll look at that if it comes. At the moment, it's for a break lower, but I don't see much upside in the commodity currencies. Longer term, I think a lot of downside. I think if we look at the global economy right now, we're in worse shape, I think I said it earlier, than before the COVID hit. And you've got all that central bank stimulus, which has created inflation, which means now they have to raise rates, crush global growth, and maybe even cause a meltdown in stock markets. We've seen some weakness, but there could be far more to come. So the dollar is a safe haven. And I think longer term, it's a good buy on the commodity currencies. I mean, we'll see what happens. That's the way we view it at the moment. So I hope you found the video useful. Thank you very much for watching. Take care and have a good day.